Hey everybody, this is Grateful Futures here. This is going to be the first video in a series about volume profile. And if you're here, you're probably already interested in volume profile, and you're on the right track because you've heard me said it 1,000 times that volume is the only driving force in the markets. It is the only thing that makes price move, and we need to be respectful of the fundamentals of the market. Trying to learn, other things before you learn volume is like trying to learn how to, I don't know, assemble a bike without learning how to ride it first, so to speak. So, what I always advocate for is learning volume profiles along with traditional volume bars. This is going to unlock a ton of amazing analysis techniques for you guys to use in your trading. And it really doesn't matter. I mean, I'm a day trader. That's what I label myself as, but it really does not matter if you're a tick chart scalper, a day trader, a swing trader, a long-term investor. This is applicable on every single time frame. So hopefully you can take something out of this into you with your trading journey. We will do some more advanced videos later on, but I want to outline the basics for you guys and how these volume profiles are actually manifested on a chart. So I won't stay on the basics for too long, but I want you guys to have a strong fundamental of how it works. Me personally, being from a chemistry background, it's very important for me to understand the fundamentals of everything so you can build on that to more advanced topics. So, and also, excuse me for kind of being quiet. So it's early in the morning here, and my office is right next to my wife's bedroom. So apologize if it's a little too quiet compared to my other videos. But anyways, nevertheless, let's break into it. So if you're here, you've probably already seen a volume profile or at least know a little bit about them, different than traditional volume bars. This will give the volume in terms of price level, whereas traditional volume bars will be volume on the time axis. So, let's just start with a basic example because the market of apples is no different than the S&P 500 or Tesla or whatever you're looking to trade. So you have, a price scale here and a certain number of volume that's been transacted. And you can see that, if you've pulled one of these up before, there's these peaks, these troughs, other peaks, and depending on what range you have, there's going to be these different peaks. So what can we take out of this chart? When the price of apples was $1, not a lot of total volume was transacted. Um, if you're a buyer of apples, I'm sure you're going to be buying apples up, but probably isn't going to be enough apples to sell before the price moves to two. Because remember, when things are in demand, when people are buying them, just from the law of supply and demand, the price goes up. When people are selling them and not buying them, they're in supply, the price goes down. So if there's, low volume here, usually at our low volume peaks, we see price move pretty aggressively out of that zone. Then when we start increasing the price to two, three, four, $5, $6, the total volume transacted it increases. So at $6, apples are having the highest transacted volume. That means both buyers and sellers are the most happy to transact at $6 when apples are $6. That is the highest volume transacted. What we call that is our point of control for apples. So at $6, everyone is very, very happy to buy and sell. Call that our point of control. Now, let's say, maybe apples are hot this season. Maybe Martha Stewart's got a new apple recipe, something like that. People are actually buying a lot at this price. It can freely move up above the point of control and test higher prices because, let's say you're a retailer of apples. you want to test to see where this point of control is. So you might move the price up a little bit to see if we can still have that heavy buying. So if we move the price up, we see we get less buyers, less buyers, less buyers, less buyers. And at $10, we have the least, or $11, sorry, we have the least amount of buyers. So that's kind of been a test to show that $6 is kind of our sweet spot if we want to sell the most amount of apples. And then let's say up here, 11, probably not going to be that many people buying. Lots of people willing to sell apples at $11, but not that many people buying. So if that's a supply, price probably going to gravitate back down to where there's more demand, roughly, in this case, about $6. Now, let's move on to the next chart just because I think it's illustrated a little better. This is just showing total volume transacted. We can also have a volume profile that shows exactly how much buys and sells are happening. And keep in mind that due to the law of supply and demand, when you have lots of buying, the price moves up. When you have lots of selling, the price moves down. That's pretty common. I think we can all agree on that. So just like I said before, at the low price points, a lot of buying, very little selling. Price is eager to move up to test an area where it's a little more at peace with buyers and sellers. As we move up, just like I said before, you get increased selling until you reach your point of control, roughly around $6 in this case. And as you move up through that, you have your increased selling at sorry, this would be a little lower. You have your most amount of selling somewhere up here at the top end of this peak. Now, if you are in the market to make money off of apples, maybe there's a way we can sell apples for more. And this is what market makers, the insiders, are doing when they play around with price of certain stocks of equities and ETFs. So, let's think of a grand scheme now. Now, if it's an organic market like apples, it's probably going to gravitate somewhere around the point of control unless there is a shift in sentiment about apples, right? So let's say price moves up. We are testing a high here to see if we can sell more. And then, for example, let's say, we put out an ad campaign with Martha Stewart and apples are the new thing this season. So you get an influx of people, or let's say maybe you even have like a ghost buyer that's buying up all the apples at $11. That it looks like right here, it looks like apples are in hot demand at $11. So what happens? Price will even move higher. Now, people think that apples are in demand now. They think that they're not going to get apples again at these lower price ranges. So some people need apples. They're not going to stop buying them if they don't think the price is going to come back down here, especially if it's something you need. So no matter what, people will start buying even at these higher prices. The people that have apples are super happy. They're selling them for over double what they were before. When their coffers are empty, they got no more apples to sell. Price will come crashing back down to where it can, kind of be happy again down here. That's kind of the basics of how the market moves. Market makers, they are going from an area where they think that they can pick up apples from the supplier for super, super cheap. They are selling them at higher prices. They're driving the price up, selling them at even higher prices. And then when they're out of stock, they will bring the price back down and buy again at lower prices. This is the constant cycle of the market makers, the insiders, and it is your job as a good retail trader, to understand what they are doing, not what other retail traders are doing. So we always want to try to understand what the big suppliers of apples are doing and follow in their footsteps. One other thing I wanted to go over back on this chart. So while we have the highest volume in a specific volume profile, that's called the point of control, we also have this other thing that kind of shows us where most of the volume is, right? So you can see that these are highlighted a little darker. Um, if this is your point of control, your highest volume, then we would go out one standard deviation or, roughly across the entire range, 68%. So 68% of this whole range, what's the most that you can highlight in 68% of the range, which is one standard deviation away from the point of control. So roughly right here and right here. They're just saying, what's one standard deviation away from that? And that area right here, that's what we call the value area. So this is, price can also tend to gravitate within the value area because it's just something statistically about distribution and the bell curve that this is kind of considered the area where price is fair to transact for a given peak in the volume profile. So we're going to call this our value area high. And we're going to call this one our value area low, just to give you some vocabulary there. So that's really all you need to know. Point of control, value area high, value area low. Now let's move over to our last and final illustration here. So now we're going from apples to the S&P 500. Same exact chart, same exact thing. Obviously, don't think about the prices as um, serious. I wish the S&P 500 was a dollar, but I want to show you guys what this looks like on an actual chart. So if I were to kind of show you guys exactly what could manifest as this volume profile. So right, if we're at the very low prices, price is probably going to shoot up. When we start to catch some selling, price will go back down. But overall, we're still in demand. So price is going to, still float up. Now, once we get into this pretty heavy area where most of the volume is going to be transacted, this is where we see that the market is most choppy. So let's say, something like this. Maybe price does go back down. Maybe there's a little, flux of sellers there. But overall, we are still moving up. And price might stay there for a little bit because this is the heaviest area where we're having the most volume. Most of the business is going to be transacted around the point of control. And now let's say that price tries to test, how high can we see that we can sell this? And as we get up there, price is probably going to shoot back down to, where more things are being transacted. It might come up, come back down, and it could even really come back down. But when it does, people think that's probably a good deal. We're under where most of the business has been transacted. So we're going to have a rebound. And let's say we even go up higher. And you guys get my point that what can we take from this is that in the point of control or the region of heavy volume area, this is where we have price being most choppy, one, and this is where we have price sticking in for quite some time. Now, if it comes up here, probably gonna come back down. So let's go ahead and mark out our value area, right? Just say this is the value area. Let's go ahead and move that down just a little bit. And this is our value area. Okay, so when we get up to the height of the value area, you can see even by the amount of selling bars that this is going to be pretty significant resistance. And if we come all the way down here, think about it in supply of demand, that's a darn good deal. There was a lot of buying here in the past. I'm going to buy before, the deal is gone. So usually price comes up pretty aggressively out of the bottom of the value area. And if it did get down here, then even more so. But now let's think about what happens when, they want to test higher prices. So it might pop up. We think, well, damn, that's way out of the value area. What's going to happen? Most likely it's going to be pushed back down. And if they are truly moving the price up through any means, through news, through simulated buying, then they're going to push the price up to a new high where it will consolidate and they are actively selling their position to retail. It might even come back up here, but when it's up here, it's like, this is so high, it's uncharted territory. So price probably going to come back down. And you guys get my point. When they are finished, when they've sold everything, price will come pretty much back down to the mean, or it's just going to come down to search for more demand. Now that is really the basics. What can we take from this? Again, if you have a peak in the volume profile, we can start to mark off different areas. So I'm going to mark off the point of control. I'm going to kind of box in the value areas, or roughly the top and bottoms of those peaks. Let's make it transparent though, so you guys can see that. And I'm going to do the same thing for the bottom. And this whole area technically would be considered the bottom of this peak. It's not just the value area. It's where this peak begins in its lowest to its highest, and then back down to its lowest. That's what we consider as an individual peak. So this area down here, this is what we consider our demand. Things are in hot demand down there. And let's make this just a little bit different color for you guys. And excuse me, I'm not usually on Google Docs, or Google Slides. Let's put that right there. That's demand there. And then this would be supply. Perfect. So when price is within this peak, it's more or less ranging between these two. How can we execute on this, right? So when it's first starting to develop, we don't really know what it's going to pan out as. But when we have a fully developed peak that's visible here, we can see that when price goes up into supply, we have a prime selling opportunity. So we could go ahead and look for rejections of that. Maybe sell here, sell here, whenever price gets up into there. And then naturally, where is it going to look to fall to? Where the most business is transacted. So if we go ahead and have our cells here, there, let's make it a slightly different red. We have our cells here. We can look to target this point of control right here. So we're selling there, and let's make it maybe a square. We're buying right there. And then let's say it comes down and is supported off this. If we're buying here, we can look to sell back up here. So these peaks kind of give information about a specific range. The other thing is you can start to see breakouts when price is actually going to test a new range based on when it breaks this peak, retests it, and if it supports, now, it's a common thing in trading that uh, old supply can become new demand. So if we see that happen, we can buy here. Now the only problem with this is you're in uncharted territory. So where do you sell? It's really kind of, got to play that by ear, but these are usually violent moves because people don't think price is going to come back down here. And also think about this, when price is here, people are generally selling. So when you have price coming through this region, you accumulate a lot of sellers. Then when price breaks out and they start to think, oh no, price might not come back down to where I want it, they close their positions at the same time people are buying because they see this. So these moves out of these peaks are generally very, very violent. Um, so that is really just the basics that I wanted to show you of this. That's really all you need to know for a basic understanding of volume profile. Now let's look briefly at some real charts. This is the S&P 500. Maybe let's take it to an hour just so you can see a little bit better. So there's a couple tools that I want you to know how to use. I use TradingView, so I'm sure there's other platforms, many platforms that have this. But volume profile, you would go to your projection tools. There's a couple that I use. So there's anchored volume profile and fixed range volume profile. Those are the two main ones. So if I'm just going to take these off my chart, let's just put some of these on together. So we have our fixed range volume profile that you click a certain point, drag it, and it's going to give you the volume profile of that specific range. So usually you want to do this on the concise up moves, and you can end it there to see where price will potentially pull back to. So that's really pretty much it for fixed range. There's another one that I like to use as well, anchored volume profile, that if you click a certain space, it's going to give you the volume profile from there to the current time and will develop as more price and more volume is developed. So let's see if we can see this. What can we see about these different peaks? So this one from here to here, our point of control is this white line. Clearly, price stayed around this area for the longest time. Then let's pick out our distinct peaks here. So we have one peak right here. We have another peak right here. And you can kind of go through that. And also I'm going to do more videos on this later, but this is a whole peak here as well, broken up into specific smaller peaks throughout it. And each one of those can act as its own peak, and the whole thing can also act as a peak as well. But if we're just going to go ahead and just show you how to use these, you can see that price is pretty much gravitating in this range around this. This is where most of the volume is being transacted. So let's go ahead and mark off also, I did want to show you this as well. So they do give you see how this is a little bit lighter up here, and this is lighter down here. This is our value area for this range right here. And this is our value area right here. Okay. And that's pretty much it there. Let's go ahead and just kind of show you what happens when we extend some of the areas of these peaks. So back to this really quickly. So one thing I do want to show you as well. So this is a high volume node. And then the dips can be considered low volume nodes. Let's go ahead and get some of this off so you can see. All right, so if I were to look at this low volume node right there and this low volume node, so low volume node, what does that end up looking like, right? Because remember, this was where our supply was. So generally, low volume nodes end up manifesting as our traditional support and resistance points. So let's go ahead and see if that's the case. Usually, the low volume nodes are your traditional support and resistance. Your POC can be a support, but the lowest volume nodes are typically right where price is bouncing at. So that's something to keep in mind. And let's see if we can see that manifest here on our charts. So I'm going to erase these the value area just for simplicity so you guys can see. But let's extend some of these low volume nodes and see if you can see where price is bouncing at here. So here's a low volume node. Here's a low volume node, and the sharper the better. This is not like it is a low volume node, but it's not an area that I can specifically pinpoint is low volume. So I'm just going to leave that alone. I mark those off differently, and I'll show you guys how to do that, when I do my long-term analysis in another video. But if we look through it and extend these out, you can see that this is where prices is specifically bouncing at, lots of the time. So price will end up coming up just to here, failing. It will come up to this one, failing. And you can kind of see price is bouncing and supporting off of these specific points. So these end up being, important points for you guys to look for trades at in the future. And I'll, go ahead and explain that as well. But this is just for the basics. And let's say recently we've been within this high volume node right here. So let's just go ahead and mark the ranges. So that's the high range. This is going to be the low of the range. And if you're thinking about this, let's go ahead and do it exactly like we did the apples and the other things. So I'm going to mark off the bottom area of that high volume node. Let's make it green because we know that the bottom of high volume nodes, you're likely going to have buying. And the top of high volume nodes, I already have it there. Look at that, are going to be selling. So how can we play this? When we start to see a range develop, you want to generally look to sell at the top of the high volume nodes, target the point of control or the low volume nodes. And at the low volume nodes or the bottom of this high volume node, that's where you can start to buy and play within these ranges. Now remember, if price breaks out of this and retests it, acting as resistance, now price is going to go in search of demand elsewhere on a lower price scale. So it's kind of funny because I actually had this marked off. This is a long-term point of control. And right after this sell-off, it came all the way down and bounced right off of our long-term point of control. So this is where the market found some buyers is from a historical point of control. So you can see it's definitely valuable to understand this volume analysis. The volume profile tool is one of, in my opinion, the most powerful indicator that you can learn on a chart. But this is the video that's just supposed to give you guys some basics and understand the fundamentals so we can go a little deeper in the coming videos. So hope you guys enjoyed that. Again, this is Grateful Futures. If you guys want to learn more hands-on with me, I do have a Discord. It's for now completely free. I'll link that down in the videos, but I hope you guys got something you can use, and let's learn some more next time. Be easy, everybody. Happy trading.